I'm joined from his office in London by Adam Cole, Global Head of Forex at Royal Bank of Canada, excuse me, Adam. Thanks for joining us today. Adam, we have gone above 124 euro dollar. Are investors feeling reassured by this news that EU will release these bank stress test results?
I think it's buying some short-term relief for the euro. Whether it will do anything to improve the prospects for the euro longer term, I'm far less convinced. If the stories we see overnight are correct, that the stress tests will involve only the 25 largest banks in the European Union, that's highly unlikely to get deep enough into the Spanish banking system to give us any evidence on the banks where the market believes the problems are, i.e. the second tier of banks within Spain. So the fact that we are getting some publicly available results bank by bank is helping. When it comes to the crunch, I think these fears are very unlikely to be entirely dissipated by the stress test.
And Adam, when it comes to the Spanish banking system, I mean, it's been much touted that capital markets are as good as closed to Spanish banks and companies. It begs the question, how long is it going to take before Spain needs some sort of aid from the EU and IMF? I mean, do you think it's a matter of time, or can they avoid it?
I think it's unlikely to be an issue in the short term. Spain has a reasonably large financing requirement in July. Beyond that, it's manageable. The issue for Spain, we've always believed, was one for 2011 rather than 2010, when you have a very large financing requirement coming due in Spain. If markets have still failed to draw a line under the peripheral debt issues in the Eurozone and questions of European sovereignty, sovereign creditworthiness, then I think this is an issue which will come back to bite Spain in a matter of months rather than weeks. So I think short term we muddle through, but this is something which longer term is simply not going to go away.
Want to spin it forward to next week, Adam, the big one, the UK 22nd, it's the budget, it's the one we've all been waiting for. Tell us how sterling might fare ahead of that and after that. How should we trade sterling in the next few days?
Our feeling really is that the rally in sterling post the election is beginning to look rather extended here, and the dynamic in terms of policy, whilst it's less negative than it was, the borrowing requirements are coming in generally smaller than expected. I suspect we might see that again on this morning's data. The budget will be relatively tight. All of that argues for interest rates in the UK staying low for a very prolonged period, and we think the Bank of England and the ECB will basically be in competition to be the last to tighten policy in the current cycle. So I think the dynamics have become less negative for sterling, but it's clearly less undervalued now than it was 2 or 3 months ago. So I think there's little to go for at these levels on the crosses in sterling.
Adam, thanks. Have a good weekend. Adam Cole there from Royal Bank of Canada.